The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us with the Nadex Binary Option Hour. And if you haven't test drove the platform yet, folks, come over to our website at TFNN.com. You're going to see the Nadex banner right in the front page. You can get the platform up, start growling and prowling out here, right now. Market-wise, what we had out here is we get the Dow up 38, Nasdaq's up 2, S&Ps are flat. No, S&Ps are up 4. Small caps are flat. You get gold up 9. Bottom line, folks, is that you got ABC structures down all over the place. So if we talk Asia, if we talk Europe, it's all there. It's a beautiful thing. And you get a little pop out here this morning.
Yes.
And that little baby is going to be, let's see how, if we just look first. Yeah, she's deviant, but bottom line is that it looks to me like we got ABC structures. The roll is on the deviance here is really cool because Europe has already given it up, and you know it has the first A to B leg is a good leg.
Yeah,
and with volume. You know, we got down there with juice, which is, you know, which the U.S. markets have not yet, folks.
That's correct.
That's right. And so watch how subtle this is, though. What you have here is this. Is that all we need today is you need lighter volume than 800 million in the NYSE and lighter than 1.7 in the NASDAQ, and that's a B to C of a small ABC down.
Yeah.
Oh, man, I'm telling you.
Yesterday was quite a market.
Yeah. It was dynamite.
While you were doing your Master Trader series.
I was digging it.
Huh?
I was digging it. In fact, right now, so
you guys going and taking like a live charts and as well as
Oh, we're doing live charts all day.
Oh, okay, cool.
In fact, what I want to do, I'm going to go over to the Nadex platform right now. Now, I had already put one trade on. See, at the Nadex platform, folks, what ends up happening is you can put a variety of trades on, okay? I put the first one on. Now, this got interesting here because I'm still getting used to it. The first trade I put on was a close by 10 o'clock.
Yes.
Under 832.80.
Okay. On the Russell 2000.
On the Russell 2000.
Yeah.
So I sold that. And when I sold that at 89. So that basically cost me $1,100 for 10 Gs, right?
Yes.
Well, what ended up happening is that, you know, the small caps gave it up. But what got interesting here is this, folks. Is that I was always wondering, as you get closer to 10 o'clock,
yes,
it's like, okay, what happens, right?
Okay, right.
So what happened is at 5 minutes of 10, it expires at 10. So at 5 minutes of 10, the bid went down to $6.
Okay.
So I bought them back at $6. But listen to this. This gets really wild. I was buying them back at $6, and the strike price was 1.4008.
Yeah.
So I said, well, that's a no-brainer. You know what I mean?
For sure.
Because in the small caps, folks, what ends up happening is you get one pop, and it's over it. So it's pretty interesting. So right now, the small caps are at 829. I actually have another one on. I get a close of 823, and that cost me $1,200 for 10. And I'm going to do another one of those because, see, the small caps are telling me they popped them yesterday, but the small caps look to me like they want to come back.
And when you're taking a look at it, you're looking at it, you're just using the 10-minute charts even on the small caps.
Yes.
Is that right? Okay.
Yeah.
Okay.
Yeah, I'm using the 10-minute and everything. The reason being is that you don't have to do these on a daily basis. You can do these on a weekly basis too. But because I'm doing them on a daily basis, and what I'm digging for, of course, is that I'm just looking for high volume lows.
Right.
So if I go back into the daily and I say the 23, how do you do
because
that?
right now you're attacking a high volume bar at 4 o'clock from yesterday.
Okay. So
on the small cap.
On the small caps. Let me just pull.
In fact, you're right at it.
Okay, so I'm going to use, I'll just put, first I'll put up the IWM, and Okay, so this baby here, yeah, I see what you're looking at. So what we're saying is at 83.10, you're at 83.04. Interesting.
Yeah, and the low on the small caps was 829.10. You're at 829.30 right now. You know, you're testing it.
Yeah.
But you had looks like volume there was about 8,000 contracts. You're coming into it with 5,400 contracts.
Yeah, and
not enough to bust it down.
Yeah.
That doesn't mean it can't.
No, I'm with you. I'm with you. But you know what's going on? I'm going anyway. See, what's going on is this, is that the Apple's going to screw this whole thing up for the bulls right now. Because they can't handle Apple right now. And what's going to happen is that Apple's going south. And as soon as, with Apple going south, it blows the whole market apart, man. I mean, this is where you're going to see folks disconnect inside the marketplace. So let me get this quick, because this is going to go quick. Okay, so 877-927-6648. You gotta love this. Okay, so we're at 820, 828. See this far away. 828. 831 is too expensive. 825. Oh, I like that. That's only $3. Oh, I like that one. Okay, so if I sell those and I sell them at 73.50, 2,600 gets me 75. Okay, that's the one. Okay. So I get two on now.
Yeah. Now, so you're talking about Apple, okay? So that's a 5-minute chart on Apple.
Right.
So if it does break this area here, okay, Apple then wants to get to the 600 mark because it's got this nice little Gartley buy pattern.
Yeah, exactly.
It came in here. So
and it blowing it apart.
That's right.
And what you have here, folks,
and you can see as you were coming down into it, you know, the one thing you had to be cautious with was the volume as you're coming into that D point there.
And, you know, inside the Tiger's Den this morning, you know, we have a lot of option traders in there. So the pin on Apple is 600.
It is, okay.
Yeah,
okay.
That's 600 for the day. Now, that's the first part. The second part gets a lot more intriguing right now, though, is that when we're talking, we're only a half hour into the marketplace out here.
Right.
Something's going on with Apple. Apple's done 5.6 million. That doesn't happen. We did 21 million, you know, 4 days ago. And we're talking about 30 minutes, right?
Yeah.
We're
30,
this 40
minutes into the trading
This is, and in fact, another trader said they're gonna beat the rest of the traders out, selling may and go away inside Apple.
Well, I think, and I even mentioned it during my show that you know, as I take a look at some of the other indicators, things that I look at in the marketplace, it almost looks like it's going to be sell in April.
Listen,
you know,
the way
sell in April.
If you go look at Europe, folks, okay, right now the clarity is so cool that the market's already rolled. And I know you bulls will say, "What are you talking about? The market's the market's rolled, folks. It's done. It's done." Europe, here, watch. If we go over to Asia first, you watch Asia and Europe. I mean, it's rolled, and it's rolled in a big way, not in a small way either. And what has happened is that you get the divergence, meaning our market has not rolled. But you know what?
Right.
Just give it a few days. And the more that it doesn't roll today, there she goes. And I expect we will roll today, though. This is not going to, you know, see that? Look at that. We just went from 24.75 to 22.10 to 22.62 in Shanghai. Shanghai, folks, went down to 10% in 2 weeks.
Yeah.
If we go to the FTSE, the FTSE is a nice clue. The FTSE is back inside the not back inside the October 24th yet, but that I suspect that's going to be pretty quick. It's back inside where the break occurred topside on February 1st. And that's saying,
so I actually even, you know, when I'm taking a look at the FTSE, I'm actually benchmarking February 3rd. And the reason is because we take a look at our U.S. markets, it's that February 3rd day where we gapped up.
That's right.
And so what's interesting about the FTSE is we broke below it yesterday. Today, all we've done is come back up to test that February 3rd area.
Right.
You know, still trading below it.
Right. And so what I would, you know, I could take the bottom of that to the top and say, okay, you're going into it. And that's saying you're going downtown.
Yeah.
We take in particular, what you had with the FTSE and the DAX is this, folks. Both the FTSE and the DAX came down with volume yesterday. You know, so it's going to be a wild one. No two ways about it. Nothing like it. And if we go over to gold, we take a look at gold. Gold just can't get the traction, man. You know, bottom line, you get a Friday What gold is done, you got a weekly ABC down, you got a daily ABC down. Now you're going to have an intraday, 4-day ABC down.
Oh, okay, because you just take a look at the...
Oh, look at it, man. I mean, it's glaring. This thing is glaring out here. What you did, folks, you came down on the 28th. You came down with 2,500 contracts. You went up this morning with 600 rather. Oh, really? Actually, hold it 1 second. No, I got to change it. Here, that's wrong.
Okay,
that's wrong, folks.
Okay.
I got to change this to the M contract. Okay, so the M contract, same deal. Yeah, so the M contract, watch how this goes. You came down with 5,800 contracts. You got back up there this morning. We popped up with 733 contracts. Yeah, and then the pop down just now gave us 3,200. Screaming. It's screaming, baby. Oh, man, I'm telling you. You got to love markets, man. I'm telling you. There's nothing like it. There's absolutely nothing like it.
I agree.
So what else is happening?
Hey, I get to go spend the weekend with my daughter.
Oh,
Heading
cool.
up here, up to Tallahassee for the weekend. So
good.
I'll take off out of here early after the show.
Nice.
And, yeah, it's going to be great. Just her and I, and some of her friends, but just her and I.
Okay, cool, man.
Very,
that's
very
huge.
Cool.
That's absolutely huge. No doubt about it.
Now, can I take the TFNN helicopter?
Yeah.
A lot easier to get up there than
no problem, man.
I-75.
Absolutely. Absolutely. Wait till you see this helicopter, folks. It's dynamite.
I know it.
Let's get our David in Clearwater. Hey, David, what's going on?
Hey, Tom. Good morning, guys. How are you this morning?
We're doing great, man.
Thank you.
Hey, great class yesterday. Also, Tom, I wanted to thank you for the free trades because for those that took the class, hopefully they capitalized on it because, Steve, check this out. Tom's giving the class, right?
Yes.
We're pulling up live feeds on the 10-minute chart, and Tom's like, oh, wait a minute. And every time he goes silent, I'm looking at what he's looking at, and I'm like, man, he's putting on a trade. So I'm like, all right, I'm going to do what Tom does.
That's too funny.
So I shorted the S&P after it tested that swing point price. And I shorted out and then kind of took some profit when it started to test before the bounce up. And then later in the day, I'm like, this is working out great, man, getting an education and getting some free cash. And then later in the day, I'm like, Tom goes, well, hang on a sec, folks. I got to do something real quick. So I sent a note on the screen. I'm like, Tom, what are you doing? I'm shorting the IW. I'm like, okay, I think I will too. So
that's great.
It was real nice, man. Appreciate the gratis trades there.
Well, we appreciate you growling and prowling out there with us, no doubt. And what happens, folks, is this: it is much easier doing. What is really cool is that doing a master trader when the market is open and you're trading simultaneously is a lot easier. The reason it's easier, folks, is that when I use 10-minute charts, but I'm absolutely not encouraging you to use 10-minute charts. First off, but what happens? The reason I do that is that they work the same as daily charts. So when people are putting on longer trades, but you can see how the volume characteristics come in or don't come in.
Right.
But with those 10-minute charts, you got to have fast fingers, man. They got to have your sell orders in, ready to go because it moves so quick.
That's a beautiful thing, man. Totally.
Yeah,
you stay right there. We got Steve Rhodes, Tom O'Brien. We got our man Dave from Clearwater. And we're going to be going to Washington, D.C. Then we're going to Philly. Man, we're going all over the country. You stay right there, folks. We'll come right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN.com. You're going to see the Nadex banner right on the right-hand side. You can test drive it and be out there growling and prowling on that platform. We're talking with Dave from Clearwater, and I believe we're going to be talking about the natural gas contract, right?
Yes, sir. I got a question for you. Typically, based on my past conversations with you and with Larry Pesavento, Larry's told me, and you have told me, and if I remember correctly, that you tend to see butterfly patterns at market tops and market bottoms. I was wondering if I could get you to put the natural gas contract on a daily. And I think, I could be wrong, I think this thing is doing a butterfly, although it's gone past yesterday and this morning past the 1.618 expansion of the XAA leg. This is what I'm proposing, and I'm asking for you and Steve's opinion here. I'm saying that the X point is the bottom of the bar on March 13th. That would be a low of $2 and 2.306 is your X point. I'm saying that your A point is March 19th with a high of 2.502. I'm saying your B point is the low of March 22nd at 2.345. Your C point is the next day, March 23rd, the high at 2.422. And it looks like, the 1.618 expansion of that X to A leg was yesterday. I was thinking about, as it came into that 1.618 expansion at price point 2184, I was thinking about putting a long trade on, but then as the day went on yesterday, as we're, I'm trying to pay attention to your class, looking at the CAS contract, and I was seeing that it just spiked, man. The volume just picked up, blew past the 1.618. So my question is, I guess, it's twofold. One, do you agree that that's a butterfly? And if so, once it goes past the 1.618 expansion, what is your recommendation? What do you do at that point?
I wouldn't touch it, period. You know, I mean, I don't do whether the Gottliebs are butterflies as soon as they have volume in them. And this has monster volume, so.
Okay, because
you know, they're off the table for me.
Comes into the D point.
Volume at all. I mean, that's, you know, when I went through it with you yesterday, I'm just not a price person. It doesn't happen. So, you know, I'd get this off your radar, man. Just like I said to you last week, this thing's going to go lower. It's going to go lower than anyone realizes. So, yeah, I just get it off the radar, man. Come back to it in 2 months, and everyone's going to be screaming again, and that's, you know. What does happen is this. What Larry says flat out, when you get a failed butterfly, it's a disaster, man.
Okay.
You know, so.
Well, it's at least going to go to the next level. So, but if you're 1.618, then you got to absolutely get out of Dodge because you don't know where it's going to go.
Right.
To.
Right.
But in this case here, and I happened to be looking at it for a client last night, and went back just historically, and this thing is trading inside the January on the monthly chart, the January 2002 area. $1.96 is a low, so you're inside that swing point. It says $1.96, but you know, with the volume, like Tom was saying, the volume that's coming into this thing, you know, quite frankly, it's not unreasonable for this to get back to $1.62.
I know.
Sure.
You know, so it's kind of like wait till you see a sign of strength before you do anything.
Because right now, basically, see a sign of strength, then retrace on lighter volume, then it looks like it would be the time to do it.
But you've been my point, Dave, is this: you've been trading long enough now, right?
Right.
What you want to do, folks, when you know, and I was trading this almost every day, right? You move on. You know, there's a million things to trade, man. I just, you know what? That's it. I'm done with that. Okay, so that's it. Bye. He's not my friend anymore. I don't care.
No, I hear you.
And I'm not coming back to that corner until, you know, disaster happens.
Right.
Right. I mean,
well, the thing is, you know, there's some things I'm just kind of keeping on the radar screen because I'm thinking that.
Well, get it off. That's my point. That's not one to keep on the radar screen. Get rid of it. Bye-bye. See ya. The field day right now is in the field day is in the small caps. What you have in the small caps, Steve and I, when we were going across the country, were showing everyone, this is what you have. You have a Gartley on a weekly. The Gartley on the weekly, folks, has almost taken 11 months to get in, and it's a Tiger Gartley. And Tiger Gartleys are so hard to do, it's insane. You did it on the weekly, and it took 11 months. You have a butterfly on the daily, and it's coming in right. Get into the small caps every single time you get a bounce, whack them. Boom!
Well, that's what I've been doing. I'm short. I've got a nice little option spread contract, a full put spread going on the IWM.
Well, there you go.
As well as TZA. Do you guys got time for one more technical question?
Sure.
If you wouldn't mind, put the dollar index on a 15-minute chart. And I'm not looking to trade this. I'm just curious. This is a general question that I wanted to ask yesterday, but just ran out of time on. If you wouldn't mind, put it on a 15-day. Take it back about 4 or 5 days.
Go ahead.
Okay. On March 27th, around 5 a.m., the dollar index kind of spiked down in that bar, about 1,200 contracts. So I was looking this morning as it was coming back into it. I'm saying to myself, all right, what are we going to use as the benchmark? On the one hand, it seems like March 27th, 5 a.m. at 1,200 contracts would be the benchmark.
February 29th is the benchmark.
February 29th.
Came back in with lighter volume. You stay right there, folks. Steve and I are coming right back.
Thanks, Tom.
Thanks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Tom O'Brien, we appreciate you growling and prowling out here with us, folks. It's a TGIF Friday. Hope you're having a great one. If we go over to Apple for a second, folks, and I want to show you what I'm going to do here is this. I'm going to show you all the larger trades in Apple. This is not Ma and Pa selling Apple, folks. What you're looking at, if you're watching Tiger TV on the screen, is that you're looking at the block trades coming across. So, of course, every 4,000 on Apple is 2.4 million. And there's a lot of them. And there's a couple of real big ones. You can't. The first one of the day when you're looking at 104,000, that's markets that in. But the second one, 12,000, 11,000, and then 4 and 3,000. You can see we have institutions right now that are basically bailing, and it will be right. Let's see. So. There's two benchmarks. The first benchmark, 20 million, which is going to blow away because we're already at 8.9. And then the next one is down. That's the big one. That's at 50 million at 594. So this is going to be making its way down to 594 ASAP. You're at 598 right now. Now, how you get into the 594 is going to talk, walk, and squawk. Because what you do have is this. It has enough time of the day to do 50 million. You do 50 million, come in at the 594. Oh, baby. G7's going to be a multi-billionaire. We got to trade a G7, folks. He put 800 million on an Apple put. It's a beautiful thing, man. Totally. You gotta love it. Look at that's a question mark. I know. You're gonna hit the pie there, no doubt. Let's go to Marshall in Washington. Hey, Marshall, what's going on?
Not much. Good to talk to you, Tom.
You also,
too,
man.
Steve.
Thank you.
I enjoyed the Master Trader series very much yesterday, and but I do have a kind of a curiosity question. You stressed yesterday that the markets all work together as one market, and yet you seem to be bullish the Nikkei and bearish everything else in the world with 825 on the S&P coming.
That's right.
In other words, you're saying that the Nikkei will go ahead and go on up anyway because of the bearish yen.
Well, what I said specifically is that, yes, on a longer-term basis, the Nikkei is going up. What I also said is that the Nikkei is at 10,000 and the buy is at 9,000.
I see. Okay, that settles it a lot. That helps a lot.
Well, you wait for retracement. The one thing that you can basically put a label on my forehead, folks, is this, okay? I don't buy breakouts. I buy retracements.
I understand.
When everyone's screaming, my history flat out, okay? When everyone is screaming, I'm buying, okay? When everyone is euphoric, I'm selling. And normally I'll sell on big markets. If I can go back to 1980, on big markets, I was looking at this the other night. I'm normally selling about a year to 15 months ahead of everyone else, and I'm already on to the next deal that's already at the bottom. That's kind of how that's how it work out, period. You know, so.
Wow. Okay, it's like when you cross through a resistance line, you look for the retracement to come back to that, and that's where you're going to get short. Or long, or whatever.
Or long. You want to be long on the next... Well, what will happen is... What should happen is this. What I expect we'll see is this. When our markets start pulling back, Europe is already pulling back, Asia's pulling back, that'll take the Nikkei back. You want to be long the Nikkei. The reason you want to be long the Nikkei, folks, is that the yen, bottom line, is weakening up, and this is a long-term change of trend. We're talking about a 30-year change of trend here, okay? It's a beauty, man. So, and it's all about the weak... I'm sorry?
That's why I'm looking at Sony.
Yeah, Sony's a beautiful deal, man.
Yeah.
Just wait for the retracement, you know?
Okay.
Patience. Patience is a beautiful thing, man.
Yeah, I'm learning that the hard way, but I'm learning. Like you said, becoming a trader is the equivalent of a college education and just as expensive.
It can be. It can be.
It can be more expensive.
Yeah, it can
if you're
be.
not using stops. If you don't use stops, I promise you. Okay,
I
good.
always use stops.
Okay, good. All right.
Have a great one, man. Have a safe one.
Thank you very much.
Thanks. You know what's so cool, and I know what happens, folks, is this, is that, and I know it's understanding just the currencies.
Yeah.
You absolutely have to get your head wrapped around currencies, folks. You just have to, because we're in a fiat world, okay? So it's all phony baloney. And, you know, there's nothing wrong with that, but understand what the foundation is, okay?
Right.
And once you understand what the foundation is, it's a lot easier to work your way through that foundation, you know? Let's go to John in Philly. Hey, John, what's going on?
Hey, Tommy, Steve, good morning to you both.
Good morning.
What's happening, man?
Hey, I've got a segue to Dave's call from 2 calls back on natural gas.
Yes.
With the commodity being on the floor, I've been looking around at the producer equities, you know, the natural gas producers.
Yes.
And, of course, they're weakening, but not yet dramatically. I suspect with inventories just being absolutely huge, with the price of the commodity likely to stay low through the summer on account of that a fair number of the producer equities will actually fall significantly more than they already have. Anyway, so in looking around, Tommy, I came across SWN, Southwestern Energy. Could you pull up the monthly on that? I've got a timing the trade question for you on this equity, if we could.
Okay, so this company here, they're focused on natural gas and crude oil exploration, development, and production. They also have transmission lines for natural gas. Okay, so the low's 28, the high's 49. Did you say a monthly?
Correct.
Okay. Okay, we're cooking.
Tommy, what I want to ask the question about is this. First, you'll observe the recent highs in 2011 And then back in 2010, the highs were on incredibly light volume.
Right.
On the monthly.
It gets croaked, yeah.
Right. And then, let's see, we had a low back, it was September 2010, $30.60. And you had a swing low there. We took that swing low out back here in January of this year on higher volume, but we failed to close underneath that swing low of 2010. Now we're just about at it. So you can see we're probing to the downside with volume on the monthly. Question I've got from a trade entry perspective, what do you do with this info? If you're looking, where is the short on this, if there is one?
Yeah, there's a shot. This stock wants to go to $19. So what you also have is that, that high volume, you have two different things here, folks. You get the high volume low in October of the debacle on the way down. That's $19. So you're in, the top of that bar is 36, and you're at 30. So you're already into the bar. So the bottom line that wants to run down there. What you also have is that lines up with it is the high volume spike going all the way back to 05, which is $20.90. I love these. What happens, folks, is that when you have two separate places that are just screaming, it's like, okay, that makes sense. It wants to go there. So now if we take this and I put this on a daily, what you have to do is, you almost have to wait for a counter trend bounce up to 32.69 to see what happens. You see how we came down off there, John?
Yes, I do.
So you get to wait to go back up there, and it's like, okay, is that going to be the test? Is it going to be on lighter volume? Because this area here from the January time frame is like, oh, hold it, doesn't want to break down yet. Do you know what I mean? You came down hard. It came back inside the range, so it's like, okay, now it's going to prove that it's a short position right now. So.
Gotcha. But you're thinking if you get that bounce, lighter volume, put on a short, manage your risk, you're thinking you've got a shot of gunning down towards that 20 area. Is that the idea?
Yeah, you do. You do. Because see, when it did, this is just what this has just done is finish an ABC down. When it broke down on that 27th, that was taking the B point out, taking out lighter volume. Now it's like, okay, man,
Yeah, the 1 to 1.272 was 29.95, where it got down to yesterday was 29.91.
I see. Yeah, right.
So it completed it. So now you'd say just a normal bounce, taking you into that high volume bar on February 28th.
Yeah.
If it closes inside 32.69, stay put, because then it's going to give you the shot at $34.
Right.
Thanks for the help, guys.
Cooking, brother. Have a great one. Have a safe one. Let's go to Susan in Boca Raton. Hey, Susan, what's going on?
Hey, Tom and Steve. How are you?
Doing great. You having a good day out there? Uh-oh. Okay. We'll get her back. We'll get her back.
I'm here.
Oh, that's a beautiful thing.
I said we got disconnected, but that's technology.
Yeah. So, what are we going to look at today?
Okay, Tom, I just have a question. I've been in and out of the TZA.
Okay.
And yesterday I got a little scared, so I sold it, but then I rebought it again earlier today.
Okay.
Question, you don't like to scale in as the stock's going up, right? You like to scale in as it's going down on the lower volume?
That's correct.
Okay, because I never go in enough initially.
Okay.
And then, of course, if it goes up, you're fixed in between. If it goes down, whatever.
Right.
So just stay pat for another little pullback, right?
Right. Okay. So let's talk about it. I'll set up a scale for you right now. Okay.
Okay.
So we're at 1778.
Right.
And the reason, folks, that I scale down, well, first off, when you scale down, you should know what your scale is before you get in. Okay. If you go on a third, what you're waiting for is more information to basically confirm whether you're right or wrong.
Sure.
So what we have with the TZA right now is that the TZA, you have the high of yesterday, which is 1822. There's not a huge amount of juice up there, but it's not bad, okay? What we've just done now is that we came into 1772, you're at 1779, and you're going to need more volume here, and we don't have it, okay? So what that sets up, you're at 1780. What that would set up is that as you pull back to 1772, which I expect you're going to get in the next 5 minutes, right?
Okay.
What you'd be looking for is this. You're looking for two different things. As it pulls back in there, if that can't break the highs of 1772, meaning with volume, right? It's like, okay, that would be your second scale right there. And the reason being is that when you come back over the other side at 1748, you have a high volume high on the way up. And it's like, okay, if it can't break how you came down, it's not going to break how you went up. And then what that would do is that then you're in twice, and then what should happen after that point is this. After that point, you should go make the run for 1787. That's what you'd be looking for. So I'd be looking for, you get into 1772, it doesn't have the volume, it rejects the price, rejects 1772, that's your second position. You should take off at that point, get into the 1787 to 1805.
Perfect. Oh, thank you so much. Enjoy always talking to you.
Okay, have a great one. Have a safe one.
Bye-bye.
It's going to be a wild day out here. And it's all about Apple again. It's going to be interesting to see how much longer the whole market's about Apple. So what you have with Apple right now, folks, it got down to $597. It's trading at $638. And as I said a little bit earlier, the pin for the option market is 600. This leg down...
It's at 600 right now.
Look at this. So this is pretty cool, actually. This is, I didn't realize this right off the bat, but this is okay. You remember I was talking that at some point
you're going to start seeing some ABC down.
Yeah,
for sure.
And it's the first one.
For sure.
This is the first ABC down, folks.
On the 10-minute chart. On the 10-minute chart.
Is there anything else but 10-minute charts? On the 10-minute chart. That's right, folks. No doubt about it. But bottom line, takes the B point out. The B point had 988 million. Blows it away with 1.4 billion. Okay, so let me just do this number. So I can take this right from the 20. 620, 607 is only $13. Okay, so 13. Oh, there it goes. Oh my God. So $13 off of that. So the ABC structure down was $5.99. That's the first one. Now the real key is going to be, can it do a second one? You know, we get plenty of time for it, man. Plenty of time. No doubt about it.
Well, so you're saying, how long is the market going to be about Apple?
Yeah.
Well, while it's got that waiting in there, really until it blows apart.
That's right. Oh, well, that takes a couple days, though. Yeah. That's all it takes. That's all it takes, because what ends up happening is that...
Even when Apple got down into the $300 range, as we're moving down, it was still heavily weighted.
Oh, yeah, but then the market's not about it, because then what ends up happening is that the market gets chopped up so badly, so quickly, that then everything just starts getting thrown out. That's kind of how it goes. Now, another 6 stock, it's not it is a 6 stock, but it likes trading like that, is Freeport-McMoRan. Freeport-McMoRan's got a weekly ABC down, as long as it closes today under 37.75 and 37.58. And now it looks like it's doing another small ABC structure on the way down. This is pretty. This stock blows my mind, man. The price spreads that this stock likes to trade in, folks, is just absolutely unbelievable. I mean, it's just like insane. But I guess when you have so much gold and when you have so much copper,
so many minerals,
that their profits and their losses are so extra. Well, they don't lose money. Okay, they just make less money. They don't lose money. Period.
Well, RIM doesn't lose money.
Oh, RIM.
They just lose customers.
RIM is toast, man. RIM is going to be sold for the patents. The patents. It's all about $140 down to 14. This is Steve Rhodes, Tom O'Brien. You stay right there, folks. We're going to be coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us, folks. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN, and you're going to see the Nadex banner right on the front page. You can test drive that platform, and I'm going to show you. So I have 3 more trades on. One of them expire at 11 o'clock, and what you're going to be looking at right now, this gets really interesting, too. So watch what you're looking at here, folks, is this. If you're looking down the bottom, I had sold 1,400 S&P at 11 o'clock, far 11 o'clock. But listen, watch this. It's at 1398.50. I had sold them at 89, and I can buy them back right now at 10. Now, I'm going to, because what ends up happening is that with 1 point, the other ones I had just bought back at so picture, this is pretty wild. So it's 1.25 points right now, and you can still buy them back at 9.50, which I'm going to do. Oh, look at that, just popped to 14.50. Yeah, right. Because what you have, let me close this one. So this is the one I want to buy back. Right there. Whoop, 1 second. How do I do this? Oh. Better not go too quick. 1 second. Isn't it? That's the buyback there. I think there's a way of doing it like this, though.
Oh, just by clicking on it?
Yeah. I guess not. Oh, 1 second. Is that it? Okay, I better do this quick. Okay, 1 second. Hold it. Look at this. Now it's 1 point. Oh, my God. Where am I? Okay. So I can still buy them back at $12.50. So I'm going to buy back 100, $12.50.
Yeah, and you're going to lock in, $6,000.
Right. Whoops. Whoa, what are you doing? Where is she? This is blowing my mind. Oh, this went to $7.
Oh, take that one.
Yeah. Did I get it yet? No, I didn't get it yet. Okay, here we go. Sorry. So buy at $7, 100. There we go. Okay. So that gets interesting, though. My point is this, which is really wild, folks, is that a 1 S&P point. Okay, look. Is it 98?
1398.50.
And it's 1400. It's 1400.
Yeah.
But the bottom line is that it makes no sense to hold those to 11 when we get 4 minutes.
You could insure it.
Yeah.
Right.
Because 1 S&P point, man, you can, that's
all of a sudden you're out of the money.
Yeah, right. And you're out of the money totally.
Yeah. That's right. It's 11 o'clock.
It's a yes and no.
That's right.
It's a yes and no trade, folks. Okay. Pretty wild, no doubt about it. Okay, so market-wise, what do you have out here? Let's see what we got volume-wise. What you actually want out here today, too, folks, is actually lighter volume than yesterday because we got to a higher high because I think we got an ABC structure on the way down.
Right.
So right now, that's happening, which is nice. It's 184 million on the NYSE, and if we look at the NASDAQ, it's 498 million. The NASDAQ has some volume. Let me just see what happens. Yeah, NASDAQ has some volume. That's some volume on it. And listen, folks, if you do want to test drive my daily newsletter, Market Insights, you can come over to our website, test drive it 2 weeks absolutely free. We got a special going on that you'll also get my best-selling book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, absolutely free. And, of course, you're going to be...
here in Tampa, April the... I should have it memorized, huh? It's the 13th and 14th.
Master Trader Series, right here in our office, folks, April 13th and 14th.
Boston the 27th.
Boston, Massachusetts, April 27th and 28th. All those details on the front page of TFNN. And, of course, don't forget that the Steve's Master Trader comes with an unconditional money-back guarantee. You'll be out there growling, prowling, making some big money. Bottom line, folks, this is a great time to do it. Why? I'm telling you, volatility, heavy trading, all of the above. The next 90 days to 120 days, folks, it's in. Game is on, baby! This is Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. Have a great one. Have a safe one. We got our man Basil Chapman coming up next from beautiful Newton, Massachusetts. Nico, I believe we have a show playing because Nico's out at the Pan Am Games in L.A. fighting right now.
Oh, cool.
Yeah. David White back here and myself later.